Now we will see the problem based on the balance sheet, especially the item which will be shown in the which heading and sub heading. Some item will be given to you. You have to find out that this particular item will be shown under which heading and under which subheading as well. So the question is, how would you disclose the following items in the balance sheet of a company? How would you disclose the following items in the balance sheet of a company? Means you have to reflect in which heading this will be shown and under which subhead as well. So there are total 9 items as given. Discount or loss on issue of debenture, item number 1. Premium on redemption of debenture. Debit balance of statement of PL. Term loan from bank. Loan repayable on demand. Shares in SBI. Investments. Interest accrued on investments. And the 9th number is guarantee given by the company. So you have to draw a format like this. Serial number, this is for serial number, this is for item which is given in the question. Discount or loss on issue of debenture, you have to write the items, serial number. Second one is premium on redemption of debenture. Third one is debit balance of statement of profit and loss. Fourth one, term loan from bank. Fifth one, loan repayable on demand. Shares in SBI. Investment, interest accrued on investment, and guarantee given by the company. And the third line will be for major head. Here we will write the under which head this item comes. So we will write the major heads. Thereafter we will write the subhead under the major head under which subheading this item comes. So see the information number 1, discount or loss on issue of debenture. Discount or loss on issue of debenture is not shown in the balance sheet. Discount on issue of debenture is not shown in the balance sheet. It is directly deducted or from the statement of profit and loss in which year it is incurred or loss is incurred. In the year of loss, it is adjusted or debited to statement of profit and loss. Is it clear? So it is not shown in the balance sheet. It is not shown in the balance sheet. Not shown. Not shown in the balance sheet. Shown in the balance sheet. It is not shown in the balance sheet. So where it is shown? It is shown as, I am marking star, it is shown as at the bottom. I am writing the information at bottom. It is shown, it is not shown in the balance sheet. These expenses means these expenses means this discount or loss, these discount or loss, these discount or loss are to be written off are to be written off are to be written off in the year these discount or loss are to be written off in the year in which they are incurred, Is it clear? So these expenses and losses, these discount or loss or expense on issue of debentures is not shown in the balance sheet. That's why I have written over here, it is not shown in the balance sheet. So where this will be shown? This will be shown in the statement of profit and loss. Statement of profit and loss. These item or these discount or loss are to be written off in the years in which they are incurred from statement of profit and loss. Is it clear? So there is no subheading because it is not shown in the balance sheet. Next is premium on redemption of debenture. This comes under the non-current. Heading is non-current liability. It's a non-current liability. Is it clear? Premium on redemption of debenture. It's a non-current liability. It is credited while doing the entry. Premium on redemption of debenture is credited in journal. So it's a non-current liability, and this comes under the long-term borrowings. This comes under the other long-term borrowing. This comes under other long-term. This comes under the other long-term liabilities. Long-term liabilities. Long-term liabilities. Is it clear? So premium on redemption of debenture comes under which head? Non-current liability comes under the heading non-current liability. Under the non-current liability, subheading is other long-term liabilities. Next is debit balance of statement of PL. Debit balance of statement of profit and loss. Debit balance means loss. Debit balance means loss. It is shown in the shareholders fund under the heading shareholders fund. Under the heading shareholders fund. Okay, shareholders fund, and subheading is reserve and surplus. Subheading is reserve and surplus. Okay, reserve and surplus. Subheading is reserve and surplus. Okay, shown as it is a debit balance, it's a debit balance, it's a loss, shown as negative. Shown as negative. Shown as negative means within the bracket. Shown as negative figure. Shown as negative figure. Is it clear? Shown as negative figure under surplus. Under this, shown as negative figure under surplus. So debit balance of statement of PL, the major heading is shareholders fund and subheading is reserve and surplus, and it is shown as negative figure within the bracket. Okay, within the bracket under reserve, under surplus, under surplus. Next is term loan from bank. Term loan from bank comes under the non-current liability. Non-current liability. Non-current liability. Term loan from bank comes under the non-current liability, and subheading is long-term borrowings. And subheading is what? Long-term borrowings. Long-term borrowings. This comes under long-term borrowings. Term loan from the bank comes under the non-current liability. It's a long-term liability, more than 12 months, and comes under the long-term borrowings. Next is your loan repayable on demand. It's a current liability. It's a current liability. It's a current liability. Comes under the heading current liability, and this is shown in the as short term borrowing. It's a short term borrowing. Short term borrowings. Subheading is short term borrowings. Short term borrowings. Is it clear? It comes under the short term borrowings. Loan repayable on demand comes under the current liability, and subheading is short term borrowings. Next is shares in SBI. This comes under the shares in SBI. It's an investment. It comes under the non-current assets. Non-current assets. This comes under the non-current assets. So shares in SBI, it's a non-current investment. This subheading is non-current investment. Non-current investment comes under non-current investment. Shares in SBI or any company, share of any company comes under the non-current assets. Under non-current assets, this comes under the non-current investment. Subheading is non-current investment. Next is investment. Investment also come under the non-current assets. Non-current assets, and subheading is non-current investment. Non-current investment. Investments. Is it clear? Non-current investments. Non-current investments. Next is interest accrued on investment. Interest accrued on investment. This comes under the current assets. Interest accrued on investment. Heading is current assets, and subheading is other current assets. Other current assets. Other current assets. Subheading is other current assets. Now guarantee given by a company. Guarantee given by the company, this comes under the contingent liability. It is not shown in the balance sheet. Not shown in the balance sheet. Okay, so it is where it is shown. It is shown in the giving the 2 star and writing over here in the under the 2 star. Okay, contingent liability. It's a contingent liability. Contingent liability. Contingent liability shown in notes to account, shown in notes to account, notes to accounts, okay, notes to account, shown in the notes to account in the footnote. Is it clear? So this way you have to write. So first what you do, you write the serial number and items. Thereafter you decide that this particular item comes under which heading and which subheading. Okay, so which heading and which subheading. So loss or discount on issue of debenture comes under the, it is not comes under the balance sheet, it is shown in the, adjusted in the statement of profit and loss, the year in which it is incurred. Okay, premium on redemption of debenture comes under the non-current liability and subheading is other long-term liability. So on you have to write in this way. Is it clear? Now come to the next question. Here also we'll deal with the items, this in which heading this will be shown and under which subheading this will be shown in the balance sheet of a company. So the question is, under what headings will you show the following items? Under what heading and subheading you will show the following item? This, for instance, number 1 is interest accrued and due on unsecured loan. Second is interest accrued and due on secured loan. First one was unsecured loan, second was secured loan. Third is interest accrued but not due on loan. Next is mortgage loan. Next is government trust and securities, uncalled liability on partly paid shares, general reserve and subsidy reserve. So I have written serial number wise the item, I have written it: interest accrued and due on unsecured loan, interest accrued and due on secured loan, interest accrued but not due on loan, mortgage loan, government and trust securities, uncalled liability on partly paid shares, general reserve and subsidy reserve. So come to the number 1, interest accrued and due on unsecured loan. This will come under current liabilities. This will come under current liabilities. Heading is current liabilities and subheading is, under the current liability, this will come under the other current liabilities. Other current liabilities. Other current liabilities. Is it clear? Other current liabilities. So heading is current liability and subheading is other current liability. Interest accrued and due on secured loan. First one was related to unsecured loan. Second is related to secured loan. This also come under the same heading, current liability, and subheading will be other current liability. Same. Okay. So should I write current liability? This will also come under the current liability. And subheading is other current liability. Other current liability. Okay, other current liability. Next is interest accrued but not due. But not due on loan. This also come under the same current liabilities. Current liabilities. heading and subheading is other current liabilities. Other current liabilities. Okay. Next is mortgage loan. Mortgage loan comes under the non-current liability. Heading is non-current liabilities. Non-current liabilities. Mortgage loan comes under the non-current liabilities, and subheading is long term. Its subheading of this under this is long term borrowings. Long term borrowings. Subheading is long term borrowings. Long term borrowings. Subheading is long term borrowings. Mortgage loan comes under the non-current liability. Heading will be non-current and subheading is long term borrowings. Next is your government and trust securities. Government and trust securities, if any such security is given, it comes under the non-current assets. Non-current assets, because the long term securities considered as a long term securities given to government and trust. Okay, comes under the non-current assets. Under the non-current investment comes under the non-current investment. Comes under non-current investments. Subheading is non-current investment. Next is uncalled liability on partly paid share. It is not comes under the balance sheet. It comes under the commitments. It comes under commitments. Commitments. It comes under the commitments. Is it clear? Comes under the commitments in the notes to account. In the notes to account. Notes to account. It is not shown in the balance sheet. It comes under the commitment. Okay, in the notes to account, contingent liability and commitments. It is shown in the footnotes. Under the notes to account, commitments. No subheadings. Okay. General reserve, it comes under the shareholders fund. Shareholders fund. Shareholders fund. Under the shareholders fund comes under reserve and surplus. Reserve and surplus. Subheading is reserve and surplus. Subsidy reserve is also coming under the same shareholders fund. Shareholders fund. Under the same subheading, reserve and surplus. Reserve and surplus. Is it clear? So this way we will solve the problem. Okay. The next question is based on the same, under which heading and some subheading this item will be shown in the balance sheet of a company. Under schedule 3rd, part 1. So question is, state under which major headings and subheadings the following item will be presented in the balance sheet of a company as per schedule 3rd of the Companies Act 2013. So the items are calls in advance, accrued interest on calls in advance, provision for retirement benefits, stores and spares, short-term loans and advances, capital work in progress and design. So first of all, what we'll do, we'll write this in the serial number and items. So serial number 1, calls in advance. Serial number 2, accrued interest on calls in advance. Third one is provision for retirement benefit. Then is stores and spares. Spares means spare parts. Short-term loans and advances, capital work in progress and design. This comes under which heading and subheading of the Companies Act in the balance sheet, which is prepared under the Schedule 3rd, Part 1. Okay, in the Company Act under the Companies Act 2013. So first one is calls in advance. Calls in advance, this comes under which head? So calls in advance, you have to see that calls in advance comes under which heading? This is very important. And calls in advance. So calls in advance, we have to pay the money, return the money or adjust the money within a short period. So this money comes under the current liability. Heading is current liabilities. Company has received this amount from the shareholder in advance, which will be adjusted by the company within 12 months. So this comes under the current liability, and subheading is other current liabilities. Subheading is other current liabilities. Subheading is other current liabilities. Okay. Next is accrued interest on calls in advance. This also comes under the same heading, current liabilities. Current liabilities, and subheading is other current liabilities. Other current liabilities. Okay, other current, it's a liabilities. Liabilities, other current liabilities. Next one is provision for retirement benefits. It's a non-current liability. This comes under the non-current liabilities. Provision for retirement benefits comes under non-current liabilities, and under the non-current liability, it's a long-term provision. Long-term provision. For instance, provision for gratuity, provision for provident fund, okay, provision for EL encashment. Stores and spare parts. Next is stores and spare parts, comes under the current assets. Comes under current assets. Stores and spare parts. This comes under the current assets, and under the current assets, stores and spare parts, subheading is inventory. Inventory. Okay, comes under inventory. Next is short-term loans and advances. Short-term and loans and advances taken. So this comes under the current liability. It's a short-term. So this is current liability. Heading is current liability, and subheading is short-term borrowings. Short-term borrowings. Short-term borrowings. This comes under short-term borrowings. Okay. Now next is capital work in progress. Capital work in progress. It comes under the non-current assets. Non-current assets. Okay, non-current assets, and heading will be fixed assets. Subheading will be fixed assets. Under fixed assets, if you see, it's a intangible. It's a tangible asset. It's a tangible. Okay, tangible. Under fixed assets, capital work in progress means, suppose building under construction, it is a capital work in progress. Plant is planted or under the progress. Plant and machinery is installed, which is under progress. So capital work in progress, it comes under the tangible asset. Design. Design is also a non-current assets. Non-current assets. Design is non-current assets. Under the non-current asset, this comes under the fixed assets, but it is intangible. Fixed assets, and under fixed asset it is intangible. So design comes under the non-current assets. Design, patents, trademark, design, copyrights, license, your royalties. Okay, these all, whatever related to intellectual property is related to the non-current assets, comes under fixed assets. It is intangible assets. Intangible. Okay, intangible. So serial number, item, measure heads and subheads you have to write. Now we'll solve one problem. Here the problem is what? The item, I have written the item. Now we have to decide this item comes under which heading and which subheading. So item is share option outstanding, money received against share warrants, deferred tax liability, building under construction, trademark, forfeited shares, calls in arrear, provision for tax, security premium reserve, unclaimed dividend and prepaid expenses. So we have to decide under which head, measure heads and subhead this item will come. So first one is share option outstanding. This comes under the shareholders fund. Measure head is shareholders fund. Heading is what? Main heading is, major head is shareholders fund and subheading is reserves and surplus. Reserves and surplus. Is it clear? Reserve and surplus is the subheading. Next is money received against shareholders fund. This will come under the shareholders fund. Shareholders fund. Major heading is shareholders fund. Okay, there is no subheading. It's a major heading. Under this there is no subheading. Next is deferred tax liability. Deferred tax liability comes under the non-current liability. Non-current liabilities. Deferred tax assets liability comes under the non-current liability. Okay, there is no subheading of it. Next is building under construction. It's a non-current assets. It's a non-current assets. Building under construction, non-current assets. And under non-current assets it is under construction, so it's a fixed assets. Fixed assets comes under the fixed assets. Fixed assets means capital work in progress. Capital work in progress. Capital work in progress. Is it clear? Capital work in progress. Next is trademark. Next is what? Trademark. Trademark comes under the non-current assets. Non-current assets. Trademark comes under the non-current assets and it comes under the fixed assets. Fixed assets. It's a intangible assets. Intangible assets. Okay, under fixed assets it's a intangible assets. Is it clear? Next is share forfeited. Share forfeited comes under the shareholders fund. shareholders fund. Under it, share capital. In share capital it is, under the share capital it is, comes under the share forfeited, comes under the subscribed capital, under subscribed capital. Next is calls in arrear. It comes under the shareholders fund, main heading, and subheading it comes under the share capital. Okay, share capital. Calls in arrear. Is it clear? Deducted from, it is deducted from subscribed but not fully paid. Subscribed but not fully paid capital. So this comes under the shareholders fund and subheading share capital. It is deducted from the subscribed but not fully paid. Next is provision for tax. Provision for tax comes under the current liabilities. It says short term provision, comes under the short term provisions. Short term provisions comes under short term provisions. Next is security premium reserve. This comes under the shareholders fund heading, and subheading is security premium reserve and surplus. Okay, reserve and surplus. Unclaimed dividend comes under the current liability. Heading is current liabilities, and subheading is other current liabilities. Okay, prepaid expenses comes under the current assets. Prepaid expense comes under the current assets, and subheading is prepaid expense subheading. Prepaid expense under the current assets. Okay, and subheading is other current assets. Next is acceptance. Acceptance comes under the current liabilities. Acceptance heading is current liabilities, and subheading of the acceptance is trade payables. Is the subheadings. Trade payables. So these are the items whose heading is this and subheading is this. Okay, this is the heading and subheading of these items. Share option outstanding, heading is, major head is shareholders fund and subhead is reserve and surplus. Similarly, acceptance, major head is current liability and subheading is trade payables. Similarly, calls in arrear, major head is shareholders fund and subheading under the share capital, it is deducted from the subscribed but not fully paid.